Okay, folks, welcome to Thursday Night Stock Charts Live. Appreciate you being here. What we're going to talk about tonight is going to be a little bit different. Well, of course, we're going to go over the weekly charts as we always do. But I'm going to challenge you to, I don't know, dive down a rabbit hole with me like Alice in Wonderland. And T.I., I saw that email. I'm sorry I didn't get back to you. Yes, you've been around so long. It was no great rush. You're not cut. You still have access, right? You weren't cut. You weren't cut off, right? I'm sure you weren't because you're a legacy. You've been around so long. You're not even automated in the system. I had to manually enter you, so don't worry about it. I'll get to you. I'll get to you. No worries, pal. You deserve a month free, okay, easily. So thank you for having patience. I'm going to challenge you, Larry. Oh, dude, you got a 107 there? It's crazy here, too. I just had a crazy bolt of lightning come down. About 10 minutes ago, it was hot as heck, sunny out. I was working on my pool pump, sweating. I go inside to put the tools away, come back out, clouds all over the place. And I just had a lightning bolt come out. I hope a tree didn't come down. But anyway, I digress. Anthony, McCarter, welcome. Happy Thursday. Happy Friday Eve, as a buddy of mine would say. All right, so I'm going to challenge you folks to come down a rabbit hole with me because I'm really tired of something and it not being spoken about. And, for many, many years, I mean, it happened in the 90s quite a bit, but it seems like the almost purposeful, manipulative conflicts that we have within our society today and around the world are kind of man-made, intentional, to get us fighting amongst ourselves and not have us looking at those that may be the puppeteers pulling the strings. And moving forward, I want to start to rise above all this rhetoric politically and the left, right, and think bigger picture. That's what we tend to do as contrarians. We try to get ahead of the curve. So I'm going to talk about that briefly, but we're going to do more of a deeper dive as we move forward. We're going to go over the weekly charts. We're going to do chart requests, of course, as we always do. But I want to broach the subject, and I'm going to get to it in a moment. It's kind of a tease. And I would love to hear discussion on this because things have become extremely toxic. And I think at some point in time, what we're seeing right now in the stock market, the debt bubble, the housing bubble, it seems kind of intentional, to be honest with you. But to what end? And that's what we'll talk about a bit. All right, so let's kick things off. First off with our partners over at TrendSpider. They sponsor the show. Automated technical analysis. Folks, if you're not using their software, where you're missing an arrow in your quiver, you're missing a tool in your toolbox, you need to be able to nowadays automate your grunt work. You're fighting against algorithms. You're fighting against AI. So speed up your technical analysis. I'll be using it today. You'll see how fast I blow through charts. Yes, I'm experienced. I use the software often, but you can learn it just as quickly as I can because I ain't that bright. All right, God didn't give me many tools in this world. Looking at charts is one of them, and a couple of others, not much more beyond that. So improve your accuracy and reduce costly analytical mistakes. How do you do that? You use a rules-based approach. If this, then that. Meaning, if your alerts fire off, predetermined alerts of when you want to enter a trade, when you want to exit a trade, that's how you reduce costly analytical mistakes. Find winning chart setups with their scanners and time your trades with precision. They do have a 7-day free trial offer. I give it away free to the contrarian trader with my 14-day free trial offer. Take a demo tour. Here's a 7-day. There's a link below, 35% discount code below. Cheapest price on the web. Let's get to it. Let's start with the weekly charts. Let's see who popped in, who I didn't say hello to. Abel, thank you, sir. Thank you for the super chat. What a way to start off the session. We're not even what? 6 minutes in, got a super chat. Thank you, sir. Abel, you got it. Hey, Bob, can you do technical analysis of the chart of Inari? NAR, the symbol? Of course I can. Paul, hello. Westlaw. The problem is investors don't have anywhere to go. Where can they put their money? They need to start thinking a bit more strategically and longer term, to be honest with you. I caught a lot of flack for staying long of the miners, the gold miners. I think that God gave us a blessing with this sell-off. So we'll talk about that in a moment because we had a big sell-off on gold last Friday. June was horrible. July was not much better. August did not begin well, and it's a seasonally favorable month. But you'll be surprised about something after the Sunday evening, Monday morning flash crash. It's not that bad. We'll talk about it in a moment. All right, let's kick things off with the 10-year yield. I predicted that we would get a breakout. We got the breakout. Does it continue? It should continue. The only reason why it wouldn't continue is because of a couple of things. One, geopolitical risk, meaning money leaves stocks, finds its way into the dollar, gold, and the bond market. That'll drive yields lower. Or the Federal Reserve is going to do yield curve control, meaning they're going to manage the yield curve to try to keep yields artificially low, which they've been doing for years now. So when you take a look at the daily chart of the 10-year yield, you take a look, and yeah, we were up today, but we ran right smack dab into the 50-day moving average. The chart still looks favorable. We're above the 200-day. We pulled back yesterday, did a retest, bounced back today. Is this a declining ceiling? Maybe. We don't know. We don't know yet. Stokes are very overbought. RSI looking rock solid. Given today's producer price index numbers, yields have to go up, unless, of course, they're being managed. So when you take a look at the TLT, the 20-year bond ETF, it pulled back today. We held 145, but the one concern, this is a weekly chart. I'm thinking way too far ahead of myself. We rallied today. We'll go to the daily chart in a moment. We're down on the week. Let's stick with the weekly view. Let's update this. And you can see that where we stalled out this week or found support this week was right where we found resistance right about here, back in August of 2 years ago, then September. That resistance level is now acting as support. Volume is probably going to come in at the moving average daily chart. So PPI data came out today, very, very hot. The odd number, here's how much it beat. 66.6%, 666. That's how much it beat. So Carter Worth put out a tweet yesterday. I like Carter. He thought it was a buy yesterday, and I could see why he said that. But I'm not ready yet to go buying this. I think we need a breakout on the TLT. We are going to get a rally here. I don't think we're going to smash right through the support level at the 145 mark. So if we rally on the TLT, you could bet your bottom dollar that in all probability you're going to get a pullback on the 10-year yield. What's going to do well? tech, gold, silver. The tips, Treasury inflation protected securities. Last week, a horrible week. This week, we are up. We were down. We're now up. One trading day left to go, as I always like to say. One trading day left to go. We were overbought weekly time frame. That has now since been alleviated. Yeah, we're above 70, but that doesn't bother me too much. Volume is probably going to come in a bit lower than what we like. MACD losing momentum, but it could regain that momentum. Daily chart. The only thing I don't like about this chart are our Stokes, which are trading down below the 50 mark. And we know that is what happened today. Rallies fade. They tried to rally it, faded. So let's just memorialize this. I do like RSI. Are we putting in a higher low? Maybe. So what the tip market, and for those that are not familiar with what a tip is, Treasury inflation protected security. So if you're worried about inflation, you buy tips as a hedge. I'm surprised these weren't up higher today given the producer price index. The dollar. Is this updated for today? I don't think this is updated. No, this is not updated. Normally by the time I go live, this is the thing about stockcharts.com. It's usually UUP. Invesco. Weekly. Okay. So the dollar broke out this week. A bit of resistance at the flattened out and honestly partially rising 200 period moving average on a weekly chart. Why is this important? Why is the dollar important? Well, it's important because we are long of positions that do well when the dollar is weak. They do very, very well. So if the dollar is strong right now, why am I playing stocks or ETFs that do well when the dollar declines? You have to have the opinion that the dollar is a flawed currency and that this strength that we're seeing is going to end very, very quickly and it's going to end horribly for the US dollar. If you're of that mind, then you should be long of gold and silver. If you're a bull on the US dollar, then you should avoid them, to be honest with you. Have a partial position, small position, but you should avoid it. But frankly, I think that given the inflation data and the amount of dilution that's going to occur with the US dollar and ongoing debt, I mean, why do you want to be in the dollar? I just don't understand it. So the dollar at current weekly time frame is not doing what I want it to do. It is above resistance. I would love to see it fade. I'd love to see it break down. But we're not there yet. So while we have pulled back these past couple of days, I have not backed up the truck on silver and gold. Daily chart. We had a fade on the 9th, pulled back yesterday. Today, consolidation day. We recaptured support. Volume was negligible. It hardly traded. Less than 200,000 shares traded of the UUP today. Let's do a deep dive. Let's take a look at the 2-hour chart. How do we close? A lot of resistance here at $25 per share. 1-hour chart. Not a good close here. It's actually an inside reversal bar. Not much volume into the close. 15-minute chart. Not a good close for the dollar. Good. Let's take a quick look at the euro, which is the largest counterparty currency that's trades against the US dollar in the dollar Dixie basket. It makes up 55% of that basket. So if you ever see the DXY, 55% of that is made up of the euro versus the US dollar. And the euro, this is only a 15-minute chart. Let's go to a 2-hour chart. Euro seems to be basing here. It doesn't look great at all, but it seems to be basing. It stopped going down. Let's go to a daily chart. Yeah, it's starting to consolidate here. So we may get a rally on the euro, pull back on the US dollar. The VIX, a basket case. Unless, of course, we're short of the small caps and the Qs to a lesser extent, but the small caps. And the small caps took it on the chin today. But the rest of the indexes did pretty well, as reflected on a weekly chart now of the VIX. We are at lows not seen since the second week of July. Stokes are not looking pretty. So, frankly, daily chart, odds still favor bulls here on equities. Unless, of course, you're trading the small caps, because the small caps are not trading properly. We'll go to that in a moment. Let's go to the equity market. The Dow Transports, assuming that we close at where we're at, slightly down from where we closed today or higher, very, very big breakout this week. We had a bullish key reversal bar, a very strong week. Now, what I would expect to see next week, assuming that we close strong, is maybe we'll get a continuation move higher. I wouldn't buy that rally, but I'd love to see a pullback and a retest of the breakout point in blue. If we get that pullback and a retest, I'll be looking at the railroads, trades like that. I don't know about airlines too much, but railroads definitely. So weekly chart transports looking good. Remember, though, one trading day left to go. Daily chart, as I mentioned on the weekly chart, I wanted to see a retest going into next week of the breakout point in blue. Same thing happened today, but on a daily chart where we had broken out yesterday. Today, we pulled back, did a retest of that breakout point. It held, and we closed at the highs of the session. Very, very, very bullish. Because traders are OCD. I know, because I have it. We love to see a pullback and a retest of the breakout point. We want to know that what was resistance is now support. Volume a bit light. Stokes looking really, really good. MACD histogram looking good. RSI looking good. Nothing not to like here. Really nice chart. Except for volume. The Dow Jones Industrial Average. I mentioned this to members last night. We're going higher. We did it. We're going up higher here. Weekly chart. We have a big, big breakout. New all-time highs this week. RSI, assuming that we close up on the week, we're going to have a weekly breakout on RSI. Yes, I know. Stokes are overbought. Yada, yada, yada. Don't buy into that line. Stokes go above 80. You got to sell. You got to short. You go broke. Volume's going to roll in very, very light this week. Daily chart. Kind of a hanging man formation. I'll take it. It's an up day. It eked out a gain. I don't like hanging man formations at the top of a trading range. Volume very, very light. All right. Keep that in mind. S&P 500. Weekly chart. Up a little over a half percentage point. Strong chart. Very strong chart. I mean, damn, man. It's kind of insane, this rally. We haven't had a 5% pullback in what? 195 days, give or take. Daily chart. And we're going higher. I did mention on Market Wrap a couple of times this week with members that I didn't like, and I still don't like, this price action for the past several days. To me, it was kind of like a lack of conviction in the markets. I thought the PPI data today would take a chunk out of the S&P 500. It didn't. It shrugged it off. The market shrugged it off. So we had a nice candlestick today, very nice. RSI broke out. I will point out, we're going to memorialize this now. We have a bit of a bearish divergence going on here. On the ultimate oscillator, where you would want to see the ultimate oscillator breaking out to new higher highs, but we haven't been above 70 since early July. And here we are at all-time highs. So maybe this will get resolved as the bearish divergence on RSI has been resolved. But just keep that in mind. How was volume today? Volume dropped off. The IWM. We remain short of the IWM. I'm going to start with the monthly chart. The monthly chart, inside bar, so far this month, no new high, no new low. We're still very extended beyond the 48-month moving average. And with yields rallying, you would have expected the small caps to have rallied, but no. In weeks past, if yields rallied, the small caps rallied along with it. Why? Perception. The perception is that you have strong economic growth. But let's face it. Why are yields rallying right now? Inflation. It's inflation. The markets are driving up yields. So if inflation is what's driving up yields and it's not the perception, it's the economy that's growing, well, what is that doing to the bottom line of the small caps that can't get workers? And if they do get workers, they got to pay up. If they do get workers, if they do want to stay in business, they have to pay higher input costs, as noted by the PPI, the Producer Price Index today, which came in 66.6% higher than expectations. So if you're wondering why the small caps are not appreciating the rally up higher in yields because of the perception of economic growth, it's because it's just that, it's perception. We have inflation. They can't afford to automate like McDonald's. So as of right now, the small caps are down on the week. Maybe they'll recover. But as it stands right now, we had broken down back in the second week of July. And I thought that finally we're going to get a payday on our short. And it wasn't to be. We did make a new lower low the following week, but we had a reversal bar, and they bid the small caps back up. So the question I have is, after testing the third standard deviation Bollinger Band here in red the week of the 19th of July, is this a dead cat bounce? And will we roll over and break support? I don't know. I'm not saying we're definitely going to, but I haven't covered my short yet. I haven't added. I'm waiting for a break on the small caps, but it's not looking great. Stoke Star still rising. That's good. Bad for me, good for the longs. Ultimate oscillator, a mess. A mess. Daily chart. We're in neutral. The small caps they don't know what to do. They don't know what to do. They're not appreciating the higher yields. They're not buying into it. Might we break out? This is a pretty good consolidation. I mean, we've been in this trading range since January. We've done nothing all year long. I mean, if we do break out, as we did 1, 2, 3, 4 times, we have broken out and failed on the small caps. Man, if this is not the market telling you something, I don't know what else is. We have a lower high. You'll know when it's all over for the small caps. When this occurs. I already have the line here. If we close down below 209 per share on a weekly time frame on the small caps, done. It's all over. The Qs, down on the week, rising yields, not good for the Qs. Volume's very light. MACD, threatening a rollover here. Let's go to comments. VIX is down and the dollar won't go higher. Maybe. I'm not sure of the correlation there, though, Westlaw. Commodities are doing okay, but there is something wrong with gold. It's supposed to be a hedge for inflation. Okay. So I'm going to talk about this in a few days because I want to be able to break it down into bite-sized, understandable chunks because it's very complex. If you want to just jump to it and get ahead of me on it, look up Basel III, the Basel III Accords, and you'll understand what's happening not in the physical gold market. The pressure you're seeing on gold right now is in all probability. I haven't checked out the conviction of traders report yet today, but the price of gold is by and large influenced by paper gold on the COMEX. Same thing with silver. They're very, very manipulated. So Basel III makes it far less attractive for banks to be carrying paper gold on their books or net short positions of paper gold on their books because it's no longer going to qualify as tier 1 collateral with the central banks. It'll qualify as tier 3, whereas physical gold and physical silver is tier 1 collateral. They're forcing these banks, and this is not just the United States, Basel III is international. So what they're doing is they're forcing every big money center bank to get ready for something very, very violent. They want them to shore up their loan loss reserves to make sure that if something goes wrong, when this bubble goes, that they're well capitalized, that the collateral that they have to offer is of substance and not paper. So look up Basel III and you'll get a better understanding of what's going on in the gold markets right now. So I'm going to go to gold in a moment. We'll talk a little bit more about it. Yeah, the agricultural names, they've pulled back, but and I would assume that they're going to do well. And there's a lot of, I don't know whether it's bots or whatever on Twitter, but they're talking about, all you hear is how lumber is down 70% up from its highs. What they don't want to talk, they want you to look at that, right? They don't want you to look at, and first off, it's politicized. The tweet I saw yesterday, this guy goes, yeah, lumber is down 70% since election day. They're politicizing lumber. And I'm not saying that Donald Trump, the Bushes, the Clintons had nothing to do, and Obama, no doubt about it, he had a lot to do with what we're dealing with right now with inflation. They allowed it. So if you look year over year, lumber is up 40% since May of 2020. And that's what I responded back to guys. I don't understand why you're pointing this out unless you want to politicize it. You shouldn't be politicizing it. Inflation is inflation. It's up 40%. End of statement. So this inflation issue is only going to get a lot worse. And speaking of lumber, I just while we're talking about it, I just want to bring it up. That was weird. So here's lumber. Yes, a horrible sell-off. But look how far we've come. Still, since 2020, lumber is still up 40% year over year. The banks. All right, monster week. We had a breakout last week. I thought we were going to get a pullback and a retest. Didn't happen. They saw the yields. They ran with it. Not much money chasing this. Very light volume. And when you take a look at a daily chart, and don't get me wrong, I'm bullish on the banks, but I think they're overbought. They need to come in. Stokes, very, very overbought. I would love to see a retest of 37. I think it could easily happen. If you go back to a chart, because I know a lot of people are looking to buy the banks. If you see this chart here, TLT, rally, that's going to be the cue for the banks to pull back. And this appears to be setting up for a rally. Do we break out to new all-time highs? I don't know. But that will light the fuse for a short-term correction on the banks. A retest of 37 on the XLF buy signal all day long. Technology weekly chart down on the week, as you might expect. Nearly a half percentage point with yields rising. Very light volume. Daily chart. We had an update yesterday. Bullish Q reversal bar today. Now, here's the thing. You get a day like this where you pull back. You had broken out here, pulled back, retested. You had better very, very quickly within the next couple of days break out to new all-time highs. If this fails and we close under 152, that's a hell of a head fake breakdown. So just beware. These Stokes are going in the absolute wrong direction. They appear, at least the fast line looks to be wanting to flatten out. Maybe it will. RSI is hooking up, but that's one day's influence on these indicators. Let's see how we close out the week on the XLK. I'm not all that confident if yields rally. If I'm right about the TLT and the TLT rallies, that'll be a catalyst to send technology higher. Semis, weekly chart. Here's your breakout. Last week, a continuation move up higher. This is why we do not chase. And this week, a pullback and a retest of the breakout point. It appears as though we will hold. Volume is telling us it'll most likely hold. There's not a lot of selling out there. Daily chart. We held the 20-period moving average. Looks as though we may consolidate and then rally. Big volume today. But I bet you, let's check out the final 15 minutes of trade. Looks like there may have been some buying into the close. No, it was actually selling into the close. Oh, we gapped down. Then here's your buying. They rallied it off the lows, smoothed out, attempted to rally. They sold the close. Interesting. That's not a lot of conviction by longs. Final 5 minutes, not a good close. Big, big volume. Beware. Biotechs, consolidating, not much going on here. I'm not seeing a trade yet. Daily chart. The two things before I look at price that pop out at me are these two things here. I'm not even going to look at price yet. RSI and Stokes are hooking up. We may rally here. I think we're putting in a higher low triangle formation, and we're probably going to break out. The flip side, if you want to be a little bit cynical here, and I have been known to be cynical, head and shoulders setup. So I would really wait for something to happen here. I wouldn't try to front run a breakout, because your front run, your lack of wanting to wait for confirmation of a breakout may lead you into a trap. So watch out for a potential head and shoulders setup. I don't think it's going to happen. If I had a bet a nickel, I'd say no, it's not going to happen. The however is, remember that we're in a very, very expensive market, and when it goes, margin calls are going to fire off. So everything's going to go down, everything. So just be careful. Consumer discretionaries weekly chart, holding the 180 mark. Volume is very light. Daily chart. Bullish key reversal bar today. No new daily high though. Volume is very light. So we may break out here. I wouldn't put a nickel down here yet. Energy. Energy is disappointing. We're up 1% on the week. But with yields rising, you would have thought that you would have seen a little bit more strength in energy, but you're not seeing it. Volume very light. Daily chart. Yields rose today. Oil down. Stokes look good. RSI stalled out at 50. We had broken out 2 days ago. No follow through yet. Let's check out oil. The correlation is very tight. Energy is up 1%, 1.01% on the week. Oil is up 1.11%. Pretty tight correlation there. Bullish key reversal bar on oil. Daily chart. Down on the day. Light volume. Jury's out. Emerging markets, down week. Strong dollar, not good for emerging markets. Daily chart. Oop, wrong chart. Gap down on the day. What are we down? Nearly 2.75%. It's no joke. Volume rose, but still below average. All right, gold. So caught a lot of flack for gold mining trade. Why not bail? Gold's going a lot lower. Yada yada yada. You got to know. You got to know why you're in the trade to begin with. Has anything changed? And believe me, when you get a flash crash Monday, a horrible June, horrible July, you really have to reevaluate the reason why you're in the trade. So it certainly did not help any that we entered a seasonally favorable month, which is August, and we're down on the month. So that being said, with all the doom and gloom that's out there about gold right now, and talk of a flash crash, everybody's using flash crash, and in fact, I used it myself on Sunday night Stock Charts Live. I said it myself. But how far down are we on the week? A little over 0.5%. So we've seen a lot of buying, and nobody is talking about the Basel III Accords. Nobody's talking about it. So to ignore it's insanity. And that's why I need to do a video on it. So I think that this is an opportunity. I already have a sizable position in the gold miners, silver miners, silver. I want to wait until I'm confident that we're done going down. Might we sell off tomorrow? Sure. I don't know whether or not we're done going down here. But I'm pretty confident that we are. And man, if we close this week out above this resistance level here and up on the week, that's a major bullish key reversal bar, and you can bet your bottom dollar that was the bottom. An event like that's a lot to ask for, but we're not that far off that mark. Now, the other reason why I don't want to go buying gold right now or adding to the gold miners is that momentum, as measured by the stochastics, is weak, and it can get weaker. It's down below 50. It's trending down below 50. Rallies tend to fade. So I want to respect that and just wait for the appropriate time to add more. Because as Westerlaw said earlier, you know, gold is for 5,000 years, a hedge against inflation. And I think somebody mentioned it to me yesterday. It's different now. I love hearing that. That means it will probably close to a bottom. So, it was an article shared by one of our members, and I forget the guy's name. He's a very good chartist, not very good at macro economics, but he's poo-pooing gold as no longer being effective as a gold hedge. That's why the central banks around the world are gobbling up gold and silver. So it kind of doesn't make sense, his argument. Daily chart gold. Now we were up. We gave up that gains on the day. So what we need to see here on gold, ideally going into next week, is this. We want to see a pullback pretend this is our pullback on gold into next week, but we do not want to take out prior lows. We don't even need to come down to the end of where this arrow is. All we care about is this. Not that. Is this. Do we get a higher low? God damn it. Stockcharts.com. You better start getting your act together. If you guys are out there. That's what we're looking for on gold. Pullback, higher low, consolidation, W formation formed, and then we begin to break out. And what probably happened on Sunday night, for those folks that were unaware of what I'm talking about, on Sunday night, I was live at the time. Somebody dropped a note in the chat box, and we weren't looking at gold at the time. It's like, hey, what the heck's going on with gold? We had just gone over it. And this was Friday. This was Sunday night. I'm live watching this. We have, I don't know, 60 people on, 70 people on. And I'm, I'm thinking, what's tomorrow going to bring with all my gold mining stocks? And silver was dropping as well. So this is the proverbial flash crash. What do we think happened here? Here's my take. You have a lot of shorts, institutional shorts, using paper gold. They saw in a very thin market, Asia just opened up, an opportunity, $4 billion worth of notional gold, and they just dumped it on the market because you could see the stacks of stop losses on the futures market. And they don't give you an opportunity in the futures market to cut a check, send it in a day or two, don't worry about it. Nothing like that. Your stops automatically fire off. So that's what happened. They blew out all the stacks of stop loss orders. They blew out all the guys on margin. And probably a lot of the banks out there began on this weakness after they unloaded a lot of shorts on the market and just killed people, began gobbling it up. And now we're only down a little over 0.5% on the week, with the potential of possibly flashing a bullish key reversal bar. So that's my take. That's what I think happened here. Did you see it after hours tonight? Gold? I just had it up. I didn't see much going on. Up a couple of bucks. Not really much. You know, when I look at gold, I always want to keep an eye on the dollar. And the reason why we're up is that the dollar is looking kind of sloppy right now. Yields are rising. So, you know, very, very thin volume right now on gold. So by tomorrow morning, it could be lower, higher. I don't like looking at the chart right now. I don't want to have hopium. All right, so gold, daily chart, good day today. We were down on the day, but when I say good, I'm looking at this. What's with the arrow? Get rid of that. All right, so it looks as though what we're doing here is we're Wing out. We're putting in a higher low from this low back here. That's pretty bullish stuff. Now, we haven't broken out to a new higher high yet, so there's nothing to do here but watch, make an observation. Gold miners, rough week. What are we down? Nearly 4% on the week. We're not that far off the lows. Let's go to my annotated chart. I don't know why this one's up. If we rally and close out the week above 42, I'd be satisfied. Silver miners broke down to new weekly lows. Volume's probably going to roll in light. I think we're setting up for a W formation on the silver miners. Silver, Stokes very oversold, coming into support at $35 per share. Volume today, light. Leave it off with nat gas. We're going to pull in here a little bit. We've been very bullish on nat gas. Right now, it looks like it's going to correct. I would avoid. Check out the daily chart. Rough day. Avoid. All right, let's talk about what the hell's going on out here. So we just went over equities. And we take a look at the economic data this week. Job openings. There's a lot of jobs out there. Problem is, you can't get employees to fill them. What does that mean? Employers have to pay more. Inflation. NFIB Small Business Index, missed. Productivity, missed. Big miss. Unit labor costs rose. Inflation. Consumer Price Index came in about average at the core, slightly below. One good bit of news, that's about it. Inflation is still on a year-over-year basis running very, very hot. So what they wanted to do is they wanted to jawbone the report down, meaning, it's not running as hot as it was because used car prices came down a little bit. Look at this headline. U.S. inflation shows signs of moderating in July. Are these people out of their minds? We have double-digit inflation, yet they call it moderating. This is what you call massaging by the news media. Initial jobs claims as expected. PPI today, a big, you want to call it a miss, beat. Let's call it a beat. The expectation was for 0.6, came out 1%. And when you take a look at this chart here, these are shipping rates. They are ripping through the ceiling. Guess who's going to pay this? Us. So this shows a little sign of abating. So get ready for this bill coming down the pike. So if we have all of the bad news that we're getting on the inflation front, why are stocks rallying? Look no further than the Fed's balance sheet. We had moderated last week. We had actually pulled back from the prior week last week, which is a rarity. This week, boom. New all-time highs on the Federal Reserve's balance sheet. So if you're wondering why equities are moving up higher, there you go. Look no further. Let's talk a little bit about what we started out with earlier, and that was the macro view. What the talking heads and the politicians want you to do is they want us to fight amongst each other, left, right. I like Trump, you like Hillary Clinton or Obama, and they want you having that argument. As long as we have that argument, you ain't looking at them. Think about what happened with the stimulus bill the other day, the what do you call it, infrastructure bill the other day. Infrastructure bill, anything but. A hodgepodge of social welfare programs, new taxes, mileage tax, surveillance in your car. And you got to wonder, how did this pass? Well, they had 17, 18 Republican senators that voted for it. So there's no Republican Democratic Party anymore. It's a uniparty. They all act as one. So we got to start stepping back and saying, you know what, we got to acknowledge that. We got to acknowledge it. And all this began way back here. And here's one of my heroes, Milton Friedman. 1971, it's been 50 years now since Nixon took us off the gold standard, ended the Bretton Woods Agreement, which provided the United States with the most amazing tool in our arsenal to expand the middle class the world has ever seen in history. We blew it. Believe it or not, if you go back and see his commentary from that evening, he said it was temporary. Here we are, 2021. I love this meme. Here you have this guy. This is Fed Chair Powell saying that inflation's transitory. If you ever take a look at the U.S. dollar, since we went off of the gold standard, here it is. This is actually from 1913 when they formed the Fed. Here is from 1971. Look what the Federal Reserve has done to this country. 1971 to present. Absolutely astonishing. William, you are so on point. Fear and shame, man. Absolutely. I love that. I just popped this into the chat box if anybody wants it. And I also found, I guess I posted this earlier, here. Here's an article that everyone should read. If you're bullish on gold, you want to know what's going on right now, read this article. Don't be ashamed if you got to read it a few times. I had to do it myself. And I'll probably reread it again. So moving on. We have, I can't say it on YouTube. They'll ban the video. We have the disease. And here you get this today. That's the effective rate in July. I ain't a doctor. I'm not saying to get it, not to get it, but this, we were told 96% months ago. And you look at these faces here, this guy in particular, and this gremlin, and you got to wonder what the hell is going on. We have given up our right to work in this country for a long period of time. We have been willing to wear masks, willing to get injected with experimental drugs. And now they're talking about doing it again. And guess what? It's global. Every Western country in the world, major Western power, is doing the same exact thing. And many non-Western countries, but to the greater extent, Western countries. And I would strongly encourage everyone, if you're not familiar with George Gammon, I like him. He's a very sensible guy, pragmatic. He's made a lot of money in real estate and other ventures. Look at this video. I watch it today. He usually makes very complex videos. This is a pretty short one for George, but very, very good. And you really want to take a step back and say, who's really pulling the strings here, and how is this all going to end? How is this supposed to end? How do we ever get out of this? Think about it. If the Federal Reserve raises rates, they crush, absolutely crush, the stock market and the wealth of millions, because nobody's going to know when to get out. If they don't pop this bubble, it only gets worse. And the downfall inevitably is going to be a lot worse when it would have been back in 2016 when Trump got into office, 2020 when Biden got into office. What's the end game here? You got to wonder. And you really got to start reading the works of these nefarious characters at the World Economic Forum. And everything is pie in the sky, promises about the great reset of how you'll own nothing and be happy. Think about that. Think about how Orwellian that sounds. Visit this site, and you can only conclude that what we're being sold right now is a segue into communism. So buckle up, folks. So if you want to wonder why I am long of precious metals in such a big way, that's it. Because at some point in time, this is going to come undone, whether it be the markets themselves that cause it to come to an end, or a geopolitical event, such as the Taiwanese scrambling fighter jets to intercept 6 Chinese warplanes into their airspace. I don't know what it's going to be. Iran, don't know. But things are not looking good. And it could be any number of things that are going to cause this whole thing to come to an end. And things get real quick. Let's do some chart requests. But I would just ask you, think about it. Think about stepping away from the left-right argument, the Republican-Democrat argument, and start thinking about how we're being sold a bill of goods and how do we educate other people, especially the millennials, not to swallow this, that they're being sold a bill of goods. Let's go to some chart requests. We're going to kick it off with Able. I'm a little bit over here, so I'm going to keep it short. NAR. For those not familiar with TrendSpider, these are your automated trend lines. Here they are, automatically pop up. I'm going to take them off. Here's your heat map, show another support level. So I'm going to begin with not the daily chart here. Where's my volume by price? There we go. Let's go to the monthly chart. I'm not familiar with this stock, so let me get familiar with it. We always want to pull back to the monthly charts to identify where a stock has been, to identify where it may be going. And thus far on the month, it's not looking good. $77.37 is a real critical level to watch because at current, we're trading down below that mark. Why is that a significant support level? Well, it was resistance here. After we broke through it back in December, we pulled back and it acted as support and we rallied. Now we are pulling back. It's being retested or has been retested once, twice, not last month, but this month at current, we're trading down below it. Does that mean we're going to close there? We don't know yet. Way too early in the month. It's only the 12th. So we have a lot of trading days left to go. So we've done our pulse check here. We would just want to know, I would do this, is I'd want to know whether or not we close back above it. No sensitivity. We'll use a 4-hour candlestick. I spelled monthly wrong. I'll have to deal with it. Left the H out. All right. All right, so if we manage to rally back by the end of the month, and close back above this mark, I would then go to a weekly chart and see, okay, do we have a trade setting up here? Because if we close back above 77.37, that's real serious support. That's saying that buyers are down here saying, whoa, we're getting a deal on this stock. So we're going to bid it back up. We have buyers of like mind willing to defend 77.37, weekly chart. Now, here's the problem. I'm going to take the automated trend lines off. This is the algorithm. Remember, this is the first time I'm looking at this chart. For those not familiar with TrendSpider, and I didn't draw these lines. The algorithm did. So, at first glance, It's not looking good. It's a very, very bad week thus far. It gets worse. That's the problem when you throw up the automated trend lines. We had broken out this week here above resistance, pulled back, did a retest, real bullish stuff. Really, really nice. Then maybe a news event happened. It was certainly a binary event that occurred, and it attempted to rally. And then, I don't know, Abel, if you're on, was this an earnings play? And it reversed on the week, and now we're down below monthly support, which you can see I have an alert set. So I would avoid this right now. Maybe we'll close out the week back above it. But it still doesn't make it all that attractive. We're going to need to, if we close back above 77.37, we're going to need a couple of weeks of consolidation and then a breakout above these resistance levels. Daily chart. And you can see that if you were long and you were using the automated trend lines, you could have had an alert set up here letting you know, possibly book profits into resistance, and you could have avoided this. So that's just another way to use these automated trend lines. So we do have support below, down here in this heat map area, but it's a wide range. I think that if we test this, we're probably going to break it, and we're going to come down to these support levels down. Oh, here we are, here. Wow. Yeah, here's that monthly support level. You got to avoid this right now. You got to avoid it. Wait for that 77.37 mark to hit, then entertain getting long of it, but not right now. We'll do. I got to check the members area. I'm running over here. I should have this ready before I go live. I don't know why I don't. It's always a last minute rush. All right. Do we have requests? I don't think I do. Unless somebody came in the last minute. No, I don't. All right. We'll leave it off with McCarter. Oh, Abel. Yeah, it was an earnings play. It makes sense. Makes sense. All right. All right. We'll do SNDL and Glob for Naresh. All right. We'll leave it off with those two. And if I could ask you folks, please smash that like button. It really helps me out a lot with the YouTube algorithm. Sundial Growers weed stock. Thank you, Paul. Monthly chart is interesting. Possible high or low. Hey, Jody. Good to have you. Better late than never. All right, so interesting here. The weekly chart, we're in a very tight trading range. Here is, let's take the heat map off. It's distracting. Okay, here's your high or low. Here's your breakout point. And we broke out this week. You have a breakout. It's a buy. You're welcome, McCarter. I believe that they can do raindrop charts on weekly charts, and yes, they can now. The weekly raindrop is not great, but my guess is that we did a breakout and we're retesting. Let's go to a daily chart. That's exactly what happened. So we broke out. We had a blue doji here. That was a buy signal. Pull back in a retest. They attempted to rally it. They're pulling back and doing another retest. Good close today. For those not familiar with raindrop charts proprietary to TrendSpider, when you look at the raindrops, the left side of the raindrop chart is the morning session. The right side is the afternoon session. And what you want to see is a big fat pregnant belly at the upper side of the raindrop. That's a bullish setup. So sundial is a buy, looking good. McCarter, is this a weed stock out of curiosity? Yeah, Field of Dreams. I heard about that. They're playing that for the game? I heard about that. Thanks for the reminder, Larry. Glob. Ooh, you had a blue doji today. And for those not familiar, you could scan. These blue dojis are very, very critical when you're using raindrop charts. You could scan for these. With the scanner. Here, right here. You got a whole bunch of them that popped up. Anyway, I digress. Monthly chart. Be careful. Monthly time frame. Automated trend line telling you, beware. You have resistance at the highs of the month. Let's take the raindrops off for a second. And look what we did. We're pulling back off the highs. This is not a buy. Avoid right now. Avoid. Weekly chart. We broke out last week, pulled back this week, did a retest, rallied, resistance. Now I'm going to overlay monthly resistance levels. Here's that monthly resistance level in dash line. You have a weekly resistance as well that's on this chart. So be careful. A lot of overhead resistance here. Volume is good. Very, very good. Daily chart. Daily chart, some topping action. Monthly resistance above. I wouldn't buy it here personally. There's too much risk, not enough reward to the upside. I mean, I'll replace the monthly resistance levels with the weekly, and it gets worse. It even tightens up your trading range all the more. So, if anything, what I want to do here is set an alert. I'm going to do it at a daily support level, but I'm going to allow it to encompass the weekly support level as well by keeping sensitivity on. Buy the pullback. Here, I'll share this with you so you can keep it. And there you go. I popped it into the chat box for you, Naresh. Folks, thank you so much for joining in. I appreciate it very, very much. If you haven't already done so, smash the like button, subscribe to the channel. Everybody have a profitable trading day tomorrow and a great weekend. Stay cool. I was about to say stay warm. And have a great night. Be well.